At IB Canada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Hello, everyone. I'm Steve MacLellan, the financial engineer and very proud member of the IB Canada Group, where we offer independent financial advice all across Canada. And I have two other independent financial professionals here with me. I've got Kathleen Berg from Whitby, Ontario, and Dave Otto in sunny Calgary, Alberta. We're here to offer unbiased and independent financial advice. We are going to talk about the biggest financial concerns that Canadians are facing today that unfortunately are getting very little airtime. What is the biggest concern we're seeing out there today that is not getting the amount of airtime that it should be getting?
Sure. For me, the biggest financial risk for people in their financial plan has got to be inflation. It really is the hidden tax. And yes, people are talking about it in the last 6 months because we've seen prices skyrocket, but they're not really, they're talking about how it's affecting them today, but they're not really talking about how compounded over time it's going to affect them. So like, for instance, a 63-year-old, let's say they're taking 100,000 from their income in retirement. By the time they're 85, if we look at just a 2% inflation rate, that's only worth about 65,000 income a year. Now, if we looked at a 5% inflation rate, that 100,000 is really only buying the equivalent of 32,000. So it's less than a third of their income. And people have not wrapped their heads around the idea of having to survive on a third of their income or increase their income so much so that the purchasing power is the same.
You know, you mentioned it's the hidden tax, and you know we see a lot of reports where the government's mentioning 3-4%, but who's kidding who? We've seen our grocery bill increase by almost 30%. There's and you talk to anybody, they're seeing huge in prices. So I think look at what is happening to the housing market right now. We're seeing 20, 30 to 50% gains. So these numbers, you're saying it's a hidden tax, but I think there's a lot hiding. I think the inflation is going on a lot worse. What do you think, Dave?
Exactly what Kathleen has said. Our current inflation rate's reported at 5.7%. That's a fair bit higher than the 2% we've been, I guess, accustomed to for a number of years. And maybe people, because it was only 2%, really weren't concerned about it. It's a small number, right? But when you start looking at the cumulative effect that Kathleen had mentioned, it does add up. And again, I think some people are of the opinion that inflation is some kind of status symbol that we're growing economically. Well, really, we're not. And really what's happening is that the government is really part of this. I guess inflation happens in two ways. Either they print money. They do print money. That's really what the cause of it is. And really what's happening is that every time we have a deficit, the government has to print money. The money has to come from somewhere, and that's how they do it. So that means every dollar that we're going to earn, basically, it's worth less just because of the result of the budget.
You're right. The money that we once had is not necessarily what we're going to have even tomorrow. And there has been a lot of talk about inflation. We talk about it different ways, but a lot of the talk that is not happening is how can we defeat this inflation, or how can we at least slow it down in the tracks? We obviously can't rely on government because they're one of the major causes for the inflation that's occurring here today. What are some steps that the Canadian, the average Canadian, or the Canadian that's taken their financial life very seriously take to stop inflation in its tracks, or at least reduce the effects that it's having on us? And before you answer this, those that are watching, if you know someone that's taking their financial life serious, share this video with them. Hit this like button, smash that like button, and share this with those that want to do even better. Now, Kathleen, you brought the idea of inflation up. So what's your solution?
People have to look at their plan and have assets and wealth that are basically inflation friendly. So, as an example, when we look at permanent cash value insurance, this is an asset that will only increase in time. So, for instance, if you have an insurable need, that insurable need is likely going to grow over time. So here you have insurance that will grow over time. Compare that, like in retirement, you've got this let's call it an asset class that is, again, it is inflation friendly because it can't go down. I can't tell you what the return would be on it, but based on life expectancy, the internal rate of return of the death benefit will probably be in a 6 to 8%. So compare that to a GIC, which is, let's say, like a 10-year GIC is earning 2%, but is taxable. So if inflation is 5, GICs are earning 2, you're actually in a negative interest. You're actually losing. You're losing money every day.
Right. So just to repeat what you were saying, having a properly structured dividend paying whole life policy can help you combat inflation on a couple of different ways. And Dave, do you want to jump on in there? I know you're also an expert when it comes to infinite banking and the use of a whole life policy.
I guess insurance, if looking at asset classes, the dividend paying whole life insurance is, to my knowledge, the only asset that continually exceeds inflation on an annual basis. And that's because it's consistent. It always pays out a dividend, so the growth annually is always positive, and I think that's one of the big things that people I guess are not aware of. The media always seems to talk about that. Stock market is where you put your money to grow, but my studies over a long period of time show that that's not the case. And the stock market does not provide the returns after fees and taxes. And then you throw inflation in there, it's questionable whether you're actually making money in the stock market.
Right. So the policy, just the way it's set up itself and the way it's taxed, can combat inflation. But if there's an investment opportunity out there, you can actually, and I can see you're not a big fan of the stock market, but there's other ways to create wealth. You can actually use your policy, still make some interest, but purchase that investment, whatever that may be. Is that correct to say, Kathleen?
Yeah, absolutely. I know a lot of people that will use it for real estate, or, I think what Dave says about the stock market is bang on, but there are moments of opportunities, right? Like the crash of 2020. And so you have this great sort of opportunity money that's sitting there for that, right? Or, a safer dividend policy, but he's absolutely right. I mean, more people have lost money in the stock market than they've ever gained in the stock market.
Yeah, for everyone that brags about how much money they made in the stock market, there's at least 9 that aren't talking so loud, right?
Right. Steve, let me just also comment. I'm not against this stock market. I actually have money in the stock market, as I'm sure that we all do. I think people just need to have their eyes open that there's also another option. That this dividend paying whole life insurance is another asset that you can also employ in your portfolio.
All right, we've
Can I add something as well?
Sure, go ahead.
So pulling back to inflation, one of the ways that inflation really hurts Canadians is tax bracket creep. So if inflation is at 5% and everybody gets a 5% raise just to keep up with the cost of goods, their purchasing power has hopefully stayed the same, but if they've jumped up tax brackets, they're actually going to be taxed more. So not only does inflation kill you in all the ways we've already talked about, but if it bumps you up tax brackets. So it's really important that people have tax advantaged assets, right? So I'm not a huge fan of RSPs because that's just a tax bomb later on, but tax-free savings accounts are a better option, and infinite banking, dividend paying whole life policies, again, are tax advantaged. Businesses are tax advantaged too. So they have to have, not everybody wants to start a business though, right? But they have to have ways to mitigate the tax bill as well.
Very understood. Very good point there. That this offers a lot of flexibility and a lot of control. Okay, so we talked about inflation. Inflation, number one from Kathleen, huge financial concern that's not getting the proper airplay. Dave, what would you bring to the table that's another financial concern that we should be made aware of?
I would say the topic of lost money is up there. Lost money for some people, they may wonder, well, what are you talking about? Did you lose some money in your couch or something? Well, no, that's not really what we're talking about. It's really about when people are borrowing money. Again, you're thinking, well, where do I go to borrow money? And most people will say, well, you go to the bank. That's where the money is, right? So, but it's really the cost of borrowing money. Of course, there's the financial cost. You have to pay interest on that money, and you're sending that out to the bank, and that's why banks are very profitable. But there's also another piece that we call opportunity cost lost, and that's when people save up money and then they redeem it to buy something they want. Well, you think, well, that's smart. That's got to be cheaper than borrowing, right? Well, not necessarily, because there is a finance cost to use cash. And then that's the money you would have earned had you not, or had you left that money there in the first place. When you add it all up over a lifetime, that's a big number.
Yeah. You know, there's a reason why Warren Buffett's rule number 1 is never lose money, and rule number 2 is never forget rule number 1.
One of my favorite rules, my 2 favorite rules.
Well, if you think about, like, let's say you have $100,000 and you have a 50% loss, and now it's worth $50,000. You have to get 100% return. You have to double your money just to break even. So it's so important that when I look at a client's plan, that I'm building things in the plan that cannot lose money. And as Dave said previously, there is no other asset out there that has zero chance of losing money. In fact, guaranteed to only increase. And I think it's prudent for everybody to have an asset class, an asset like that in their financial model. And that's an infinite banking policy.
Yeah, the money inside your infinite banking policy is vested, meaning it never goes down, regardless of what happens to the economy or the stock market. And I wanted to touch on both of your guys' points there. You know, one of the things I've realized being an engineer, when I first got into this industry, I treated money very much like math, only soon to find out that money is very emotional. And when you lose, it hurts so much more than when you make, right? I remember doing some day trading, week trading back in my engineering days. And when you made money, it was never enough. And when you lost, it just ruined everything. And you lost a lot of focus on work. So that's one of the things, one of the major reasons I love the properly structured dividend paying whole life policy. Yeah, it's boring. You know, it just goes up. It's very tax efficient, but it can make your life very interesting too.
Yeah. And this asset that just grows and grows over time. And I love the fact that, you know, in retirement or as seniors, they have a massive pool now because the cash values are growing and approaching the death benefit values. They have this amazing amount of wealth in the safest asset class there is around.
There was a chart which was called I believe the priority pyramid, and it showed basically on the base of this pyramid what you should own as your base. So just like you're building a home, you want to start with a good strong foundation because that's supporting everything that's above you. Well, on that pyramid was dividend paying whole life insurance. It's been on there for years, and I'm not sure why people have forgotten about it, but it still is as secure as it has ever been.
Right. Yeah. And we talked about the dividend paying whole life policy. And one of the beautiful things about this as well, it's vested, but it also grows extremely tax efficient.
Yes.
Dave, can you dive into that a little more?
Sure. And again, tax efficiency is important for sure, especially in an environment where we have inflation and other things we are concerned about. It's just one of those vehicles that I think are very misunderstood and are not talked about. And it's one of the biggest opportunities many people just don't have their eyes on. And I think it's time. Oh, I know it's time that people take a look at these things. It's like it's a secret out there because it's not being talked about. The media is not talking about it, but they should be, because it's one of those. I guess I would call hidden treasures out there that people are missing out on.
One of the things I see out there a lot, there's a lot of famous people that have whole life policies. Maybe everything does hit the fan where we're taxed at a crazy high rate. Inflation keeps on going. Bankruptcies start happening. Do people lose the cash value that's inside their whole life policy if they have to declare bankruptcy, or if the government comes after them, CRA or whoever?
No, not if it's structured properly, right? If it's personally owned with a named beneficiary, then it should retain its creditor-proof status. If it's owned in a corporation, or if you've borrowed against the policy or assigned it, then it could have exposure in a bankruptcy. So it depends, really.
The famous answer, it depends.
As long as it's set up properly, it's creditor proof. It's your money. You have control of it. You have access to it. Now, folks, I hope you got a ton of value out of today. We covered inflation, the hidden tax, as we called it. We talked about the loss, actually, how detrimental loss can be to you reaching financial independence. And Will Moran has an awesome chart. You talked about opportunity cost and opportunity loss there, Dave, where Will shows the difference between a saver and a buyer. And what happens with the saver is they save, and then they buy. And then the person that goes in debt and then tries to pay off their debt, they generally end up at the same spot,
right,
which is very powerful. So there's so much more to this that the financial industry doesn't talk about. They're too focused on chasing high returns, all the fun stuff, I guess, where this really tax efficient, vested growth, so important. Right. And what's nice, guys, I have to applaud you. We just didn't talk about the problem. We actually brought up a solution, a very powerful solution. Listen, if you haven't already, smash that like button. Share this with someone that's taking their financial life seriously, and they want to get to that next level. And all you have to do, please, if you want to learn more, go to our website, ibcanadagroup.com and .ca, and you'll find an independent advisor in your area that's willing to help you.
IB Canada Group, your independent authority for information on the infinite banking concept.